The rupee has steadily declined to several record lows repeatedly in recent weeks, continuing its significant decline this year. And this comes even as the International Monetary Fund called the Indian economy, quote-unquote, a shining star, and bets on the country's growth story have risen. However, a steady rise in the dollar over the last 2 years has weighed on the rupee, along with most major currencies in the world. The impact has been more on emerging markets currencies, barring a few spikes here and there. First, the aggressive rate hikes by the Fed lifted the greenback. Now, despite the Federal Reserve pivoting to an easing cycle, seesaw bets on rate cuts and Trump's win have kept the dollar well bid. Pro-dollar positions come even as the Fed delivered a large-sized rate cut in September and followed it up with a smaller 0.25% cut on Thursday. As a result, the rupee has steadily weakened, hitting record lows repeatedly this year. Now, to give you some context here, the rupee was trading at a little over 74 per dollar at the beginning of 2022. Now the currency is changing hands at a new all-time low of 84.39 per dollar. What's not helping the Indian currency is the significant foreign portfolio outflows this year. In October alone, global funds sold off a record $10 billion worth of Indian stocks. Foreign investors have broadly stayed on the sidelines, worried about high valuations as Indian stocks have hit multiple records. However, domestic investors have helped prevent a deeper market sell-off. The benchmark Nifty index is up more than 10% this year and on track for an unprecedented 9th straight year of gains. So unless foreign investors return, the currency is said to be on a steady path lower, with analysts eyeing 84.5 per dollar as the next significant level. And for more on this, we are now being joined by Amit Pabari, who is the founder and MD of CR Forex, and he joins us live from Mumbai. Welcome to the broadcast, Amit. Do tell us first up, why is the rupee really falling to new lows in recent weeks?
Good morning. Basically, there are two reasons for the same. First reason is, in the month of October, FII has taken out money close to $12.5 billion because of valuation concerns in Indian equity market. Second reason was the market was expecting that Trump can win the election. The yields were signaling that Trump can win the election, and because of which the dollar was getting a higher bid, and dollar index from 100 level, it has moved higher towards 105 kind of level. These are the primary two reasons why all emerging market currencies got weaker and rupee has also got weaker.
You just spoke of Trump getting elected as the US president. What is your outlook for the rupee after Trump's win and the Fed's rate cut?
In the near term, dollar can still get a bit, but on the broader point of view, we are expecting that dollar index can top out between 105.5 to 106 kind of a level. Not expecting dollar rally to continue. It will be buy the rumor, sell the news. Basically, one of the major problems in the US currently is its rising debt. And in order to reduce the interest outflow, Fed has to go and cut the interest rate aggressively. If Fed goes and cut the interest rate aggressively, the dollar index can again come down towards 102 kind of a level and 100 kind of a level in next 3 to 6 months. If that happens, it will be great for all emerging market currencies and rupee also.
Well, that's as goes the rupee against the dollar. What is your view on the rupee's performance compared to emerging market peers like you just spoke of?
Yeah, let me give you some data points. From 1st October till today, dollar index has got stronger approximately by 5%. All other emerging market currencies like Chinese currency or Japanese currency, they have got weaker, close to 1.5–2%. Other emerging market currencies have weakened more, 3.5%, 4%. But if you see relatively performance of rupee has got weaker close to, less than 1%. So basically we can say that rupee has outperformed other emerging market currencies as compared the strength versus dollar and other emerging market currencies. Because RBI was preventing sharp fall in the rupee.
Amit, how do you rate the RBI's moves in balancing the risks for the rupee?
That's the tough question. If I have to rate, I will give them close to 9.5 out of 10.
That's a very good rating. Could you extrapolate on it?
Let me give you an example. RBI have played a master stroke. They have understood that as a country, we are not a net exporter. We are still a net importer. So it is very, very important for that central bank that whenever the flows are coming in the form of capital inflows, they should accumulate that flows, because that flow can go again back to their home country at any point of time. If you see in last 2 years, inflows were coming in and RBI kept on building the reserve. So currently the reserve is close to $700 billion. In terms of import coverage ratio, it is close to 10 to 11 months. In 2014, we were fragile 5. In 2024, we are having one of the largest reserves, top 4, top 5 countries to have that kind of reserve. So in good times, they've accumulated the reserve. When the entire world currency is getting weakening, they are selling off their reserve. So basically, they are able to curb the volatility on both the sides. That is one point. Second data point, let me give you. In 2022 October, rupee broke the key level of 83. From October 2022 till October 2024, it took 2 years for rupee to move by 1 rupee. Basically, they have been able to control the volatility at the greatest level. And that is what the job of a central bank is, that you do not protect a level, you curb the volatility so that the exporter, the importer, they are able to manage their risk well.
Okay, Amit, thank you so much. Points well made. Thanks so much for joining us on the broadcast this morning.
Pleasure is mine. Thank you.
For all the latest news, download the WION app and subscribe to our YouTube channel.